Saturday, November 30th, 2019, MONERO 64, home of alternative economics and contrarian views. Today I want to talk about how all fiat currencies are sinking, the US dollar, all the other major currencies, and why, in my opinion, one needs to focus on your national currencies versus gold or even silver. Gold is the real benchmark if you want to look at how your currency is doing. I'm going to have a look at some charts of gold in all the major currencies. I also want to talk about the dollar index. Dollar index, in my opinion, is not such a great indicator. It's not a way to hedge your dollar exposure. And as you see, there's nothing better to hedge any fiat currency exposure than precious metals, in my opinion. And I will focus on gold. Before that, I like to say that with Thanksgiving, Black Friday, Cyber Monday, I've got a 20% promotion discount on all the merchandise in the Teespring store, MONERO 64 Teespring store. I took advantage of it. I just ordered my Become Your Own Central Bank Keep Stacking mug here. It's got a sovereign in this side. On the other side, it says don't get caught holding the bag. It's got a silver Britannia. I just received that in the post today. Having a drink here to clear my throat. The promo code, by the way, and this is good till Monday next week, end of the day, is MONERO 64. If you're interested in any of the other merchandise there, make sure you use the promo code and you get 20% off, like I did. So, yes, I used to keep a blog many years ago while I was still in the city. I did it for myself. It was called forsoundmoney.com. I don't run that blog anymore, that website. I'm focusing on doing videos on YouTube. I think you can get much more exposure and reach a lot more people through YouTube. I used to also allow some websites to publish my articles, and there's a website that's still around, marketoracle.co.uk, and they've got an archive of all the stuff I wrote. And this article is from April 24th, 2017, and it's entitled Currencies, They're All Sinking, Part 2. Unfortunately, I haven't got access to Part 1, but this will do. This is an article basically saying what I'm saying nowadays, and nothing has changed. How fiat currencies are all sinking versus gold. For example, if you look here towards the end of the article, I say our latest calculations show that the dollar, the euro, the British pound, the Swiss franc, and the Japanese yen have continued to lose value against gold. Since we last wrote, the dollar price of gold has gone from $618 to $684. It'd be nice if you could buy an ounce of gold for that now, wouldn't it? Which is a gain of 10.68% for gold. Against the euro, gold has gone up from 472 euros to 502, a gain of 6.35%. Versus the British pound, gold is up to 342 pounds from 316, a gain of 8.23%. Can you imagine that? If you could buy an ounce of gold now in the UK for 342 pounds. So you get my gist, right? Swiss franc has lost 9.15% as gold has risen from 754 to 823. And lastly, against the yen, we have seen gold rally from 73,000 yen to a present price of 81,100, or a debasement of 11.09% for the Japanese currency. So this is what I wrote in April 2007, just in the beginning of the financial crisis. We didn't know at the time, really. We were seeing a few fractures, some cracks, right? Subprime, some subprime lenders were going under back then, but it was just starting, right? So before I look at some charts of the price of gold nowadays versus major currencies, I first want to talk a little bit about the dollar index and also about fundamentals, why I see the fiat currencies continue to sink, right? The fundamental reasons behind it. The charts will give you a long-term technical picture of where the fiat currencies are going versus gold, right? So the dollar index is not a bad indicator about the strength of the fiat dollar versus other fiat currencies. But as I said, I think the best way to hedge is with gold. So yeah, the dollar index is basically, as Wikipedia says here, US dollar index, USDX, DXY, or DX is an index of the value of the United States dollar. I would even say that that's not really right. It's the Federal Reserve note, right? But anyway, that's a different story. Relative to a basket of foreign currencies, often referred to as a basket of US trade partners' currencies. And it says the index goes up when the US dollar gains strength or value when compared to other fiat currencies and not gold, right? It is a weighted geometric mean of the dollar's value relative to the following select currencies. Euro, 57.6%. Before there was a euro, that used to be the Deutschmark, the French franc, the Italian lira, right, the Spanish peseta. So that's why the weighting is so big for the euro. Japanese yen, 13.6. So that's already up to 70%. And then the pound, 11.9%. That's already 82%. And then you add the Canadian dollar, 9.1, Swedish krona, Swiss franc. So basically, the dollar index is mainly a measure, I would say, versus the euro. The euro is quite important. And yes, the dollar might be going up against these currencies. The dollar index might be doing well at certain junctures. And you could hedge the weakness in the dollar versus those currencies. But for me, longer term and for safeguarding your wealth in any national currency, the dollar or the Federal Reserve note included, the best way to do it is through precious metals. I've always said I think the dollar index, to be honest, is a distraction, right? So that's the dollar index there. I'll just quickly show you a chart of the dollar index because I've looked at these cycles before in the dollar index. As you can see here, this is going back. This is a monthly chart going back to the early 70s. And you can see here that there's a cycle in the dollar index. You can see the low in 1978, October, the high in February 85, the low in September 92, the high in July 2001, the low in March 2008, and I think we made a top in January 2017, and we haven't seen that top surpassed ever since. Yes, it's rallied in the last couple of years or so, the dollar, but I don't think we're gonna see the dollar return back above that 2017 level. If anything, I think we're on another downward trend. I measured these cycles, and the average length is 92 months. The longest is 106 months. The shortest is 76 months. And the mean is 91 months, right? So, and if you look at the last few cycles, like from July 2001, or let's say from the low in September 92 to the high in 2001, that was 106 months. So that was a long cycle. And then you had the cycle down, the leg down in March 2008. That was 80 months. And then we had another leg up since March 2008. We've gone 106 months to January 2017. That's why I personally think that was the top. The other point I would make, just to show you how gold has performed well, even when the dollar index has gone from just above 70 in March 2008 to a present level of just above 98. Back in 2008 in March, gold touched a high of 1,031. And you would think if the gold price traded inversely to the dollar index, we'd be a lot lower than 1,000, but we are at 1464 as per yesterday's close, right? How long is this next leg going to be? Well, looking at the last three cycles, it could be 80 months, right? So just about 6.5 years. So if you take that from January 2017, that's 2023, or it could be longer. It could be 2024. So I think the dollar index is on the leg lower here. Yes, we've rallied since the beginning of 2018, but looking at the cycles, it looks like we topped in January 2017. So that's enough for the dollar index. Now, I want to show you why they're all sinking. All the fiat currencies, the dollar included. And I'll show you some charts here. And I'll start with the XAU USD, or the dollar price of gold, right? And I got this chart here going back to 2005. And some people talk about how gold dropped during the financial crisis. And it did. But you need to look at when the financial crisis started. Looking back, there were cracks showing already in 2007. And you can see that gold started 2007 around $600, right? And then we rallied all the way to above 1,000 in March of 2008. And then throughout the crisis later on 2008, we dropped below 800 briefly. And I can tell you, I was watching the market very closely. I was in the city. It didn't stay down there for too long. So if anything, gold actually was still relatively strong compared to the beginning of the crisis, if you consider the crisis starting in early 2007, right? That's why when people ask me, oh, if we have a next crisis, is gold going to go down? It might, but I don't think it matters. So here we are now in 2019. So as you can see, we've had a good run in gold since May or June this year. We went from below 1,300 all the way up to 1,550 or thereabouts. And we've been consolidating, and that's what it looks to me, a consolidation. And you can see as well, going back, yes, we're off the highs in 2011, but the trend is still up. This is with the US dollar, right? So now let's look at some other major currencies. Let's look at the Japanese yen. This is a very interesting chart here because with the Japanese yen, you can see there, this chart goes back to around 2006, and we're trading roughly around 70,000 yen, right? The financial crisis occurred. Actually, the yen did strengthen quite a bit, but as I said, even with the yen, it was a very quick move. If you had tried to time that, it would have been very difficult to get on board, right? And that's why I say just hold on to your precious metals, your physical precious metals. Try to dollar cost average, right? Don't try to trade it. But you can see, I mean, we were back then around 70,000. Now we're above, we're at all-time highs. We broke the 2013 all-time highs, and we're now at 160,000. And this looks like a consolidation as well before our next move higher. Just taking a breather, the Japanese yen. So not doing great either against gold. Some people say, oh, the Japanese, they've been able to keep rates at zero or negative, and the yen's pretty strong. There's no inflation. But I'm sorry, this is telling me the yen is continued to be debased against gold. Let's look at it against the euro. Same pattern. We did make a new all-time high earlier this year. We've come back, and again, it just looks like a consolidation before a next move higher. And you look at it where it was back in 2007, around 480, 500 euros. Now we're at 1300 euros. So trend still higher for gold. Swiss franc. Many people consider that a safe haven currency, but believe me, it's not. It used to be many decades ago, but not anymore. You can see we were trading around 750 just before the financial crisis. It actually did come down like the dollar during the financial crisis, but it was still on an upward trend. Yes, it hasn't performed as badly as the yen or the euro, but again, the chart looks like it's consolidation. The trend still looks from the lower left of the chart to the top right, which is positive, right? Let's have a look at XAU GBP with the British pound. That's a little different because there's been a lot of volatility with the pound versus the dollar because of all the shenanigans around Brexit, right? And that's why this looks a little more different. Looks more like a top than a consolidation. But I still personally think that the pound's not going to gain any credibility from the election or Brexit. It's going to continue to sink as well, just like the other fiat currencies. It's no different. If anything, we have very little gold here in the UK, only 300 tons in reserves. And as you can see, before the crisis there, we're trading below 400 and now we're at 1100. So not much else to say there, really. Let's look at XAU AUD, Aussie dollar. Well, the Aussie dollar it just proves the point even more. We're way above the previous all-time highs, above around 1850. We're above 2000. And again, looks like a consolidation before a next move higher. And can you imagine if you had bought Aussie dollar back around 2007, it was at, if you had bought, gold in Aussie dollars, it would have been $800. Now it's cost you almost 3 times as more. And that's not gonna end either. It's gonna keep sinking as well. Kiwi or XAU NZD or NZD, same kind of chart. Hasn't underperformed versus gold as much as the Aussie dollar, but yeah, big consolidation again. XAU loonie, the Canadian dollar, XAU CAD. Well, we were at around 700 during the financial crisis or thereabouts, and now we're at almost 2000. I mean, there's not much to say there. And of course, the Central Bank of Canada, the Bank of Canada, has zero gold reserves. Anyone who has a gold coin has more gold reserves than the Bank of Canada, right? And we are above the all-time high back in 2011 as well. And it looks like we're just testing that level before resuming the move higher. And now another currency I usually don't look at, the Indian rupee. I don't have a chart that goes back further than 2012. But as you can see, gold is doing really well as well versus the rupee. And again, it looks like a consolidation before the rupee starts sinking again or gold starts going up again. So that's the technical big picture. I like looking at the big picture. Of course, if you're a short-term trader, this doesn't really apply. But I think we need to look at the big picture if you want to make sure you preserve the value of your savings. What about the fundamentals? Why do I think fiat currencies are going to keep sinking versus gold? Well, because the central banks are at it again. And by that, I mean they're printing money, they're doing QE, they're bailing out banks again through the repo market, not just the Fed, but the ECB, the Bank of England isn't doing QE, but I think they're just waiting for things to settle politically before starting it again. And now the other thing that's really concerning for the value of fiat currencies is that even the central bankers are calling on governments to start spending more, to turn on the fiscal spigot, right? And that's going to make it even worse. And why they're doing that? Well, because all the money they've thrown into the system, all the negative rates, zero rates, they're not working. It's like pushing on a string. And they think that if governments start spending more and borrowing more, it's going to help. And I can tell you it's not going to help. All it's going to do is going to help the national paper fiat currency sink even more versus gold. So there you go. If you enjoyed this video, make sure you hit the like button. Make sure you share it far and wide. If you haven't subscribed to the channel yet, think about subscribing. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great weekend. Take care. Bye.